Let's be real for a second. Have you ever thought about making a really big purchase? Like a new truck for the business or that dream RV for the family, and just felt that knot in your stomach when you think about the financing? Yeah, we've all been there. It can feel super complicated. Well, in this explainer, we're going to untangle all of that. We're going to give you the playbook you need to get the financing you're looking for.
So that big goal is on the horizon. Maybe you're ready to grow your business and you need that new piece of equipment to make it happen, or maybe you're just ready to finally hit the open road and make some memories. The dream is there, the need is real,
And then, boom, the financing part hits. And suddenly it feels like you're staring at this giant, confusing maze. It's filled with jargon and paperwork, and it feels like it's designed to be intimidating. You're not alone in feeling that way, and honestly, it stops way too many good plans right in their tracks.
But what if I told you it doesn't have to be like that? What if you had a clear strategy, a playbook to guide you through it all? That's exactly what we're going to build right now. By the end of this, you don't know the key plays to make, so you can walk in with confidence and get what you need.
Okay, first play in the book. This is the first big decision you've got to make. Are you going with a loan or are you going with a lease? Both options get you the keys, but, and this is a big but, they affect your money in totally different ways.
So what's the actual difference? Let's break it down real simple. A loan is like buying a house. You get the mortgage, you make the payments, but that house is yours from day one. A lease to own is more like renting a great apartment, but with a special clause that lets you buy it when your rental agreement is up. You pay less upfront, but you don't actually own it, yet.
So how do you pick your play? It all comes down to what's most important to you right now. If preserving cash is your #1 priority, a lease is going to be your best friend. We're talking low, sometimes zero down payment, which frees up your money. And for a business, the tax advantages can be huge. Often the entire lease payment is a write-off. But hey, maybe you need flexibility. Maybe you need the latest and greatest equipment every few years. A lease makes upgrading way easier. See? There's no single right answer. It's about what fits your game plan.
Okay, you've got your play in mind, loan or lease. Now for the part everyone sweats. How do you get approved? I'm going to let you in on a little secret. It's about so much more than just your credit score.
This quote right here, this is a game changer. Credit score sets pricing, not permission. Just let that sink in for a second. Your credit score doesn't decide if you get approved. It decides how much you're going to pay for the loan in interest. So if your score isn't perfect, don't panic. That's not the end of the story, not even close. So, if it's not just the score, what do lenders really look at? They look at the whole picture of you. How stable is your income? How long have you been in your job or industry? What does your recent payment history look like? And here's the real pro tip, the secret weapon, your down payment. A strong down payment screams that you're serious and you have skin in the game. It can single-handedly turn a maybe or even a no into a definite yes. Let's make this real with some examples. Picture this. You've got a sparkling 760 credit score, a good, steady job. You're in the driver's seat. Lenders are practically lining up to offer you great rates with zero money down. That's the dream scenario, right? Okay, but what about a more typical situation? A 675 score. This person had a couple of hiccups a few years ago, but their income was solid and they had a decent down payment ready. You know what? Their own bank told them no, but by structuring the deal the right way, they got a solid approval. A fair score is totally financeable. Now, this one is the most important example of all. A 610 score. Some past issues. Most people would just give up. But look, with a strong 25% down payment and by choosing the right kind of vehicle, they got approved. The takeaway here is absolutely crucial. A low score is not a stop sign. It just means you need a smarter strategy.
Okay, you know which play you're running, loan or lease, you've got your story straight for the approval. Now, where do you actually go to get the money? This is another place where people really limit their own options. You've basically got 3 doors to choose from. There's your bank, which you know, but they can be super rigid. There are dealerships, which are convenient because it's all in one place. But then there's the third door people often forget, brokers and online platforms. These guys have a massive network of different lenders, some of whom might specialize in exactly what you need. Not shopping around is honestly one of the biggest mistakes you can make.
And here's an insider tip that can blow the whole game wide open for you. So many people think you have to buy brand new from a big dealership to get a loan. It's just not true. You know that perfect used truck you found online from a private seller? A good broker can get that deal financed. Knowing this one thing can save you an absolute fortune.
Now, you might be wondering, how is that even possible? How can a lender feel safe financing a used truck from some guy I found online? Well, it all comes down to a really important, kind of boring-sounding set of rules called the PPSA. Stick with me, because understanding this gives you a huge advantage. So what on earth is the PPSA? Think of it like a giant public bulletin board. When a lender gives you a loan for a truck, they go to this bulletin board and post a note that says, "Hey everyone, we have a financial claim on this specific truck." It's the official system that protects the lender, and it's what makes this whole world of financing possible.
You might be looking at these dates and thinking, why do I care about some legal change from over a decade ago? It's a fair question. But here's why it matters directly to you. A clear, reliable system like the one we have now gives lenders confidence. Before these rules were fixed, things were messy and lenders were nervous. Now the rules are crystal clear, and when lenders feel protected, they are way more willing to say yes to your loan application.
And that's really the bottom line. This clear, predictable system gives lenders the confidence they need to do business. And when they're confident, credit opens up for everybody. So those boring rules are actually your best friend. They create a stable market where you have more options.
All right, we've gone through the different plays, we've cracked the approval code, we've talked about partners, and we've even looked at the rules of the game. Let's put it all together into a winning strategy you can use right away.
Here's your 4-step action plan. It's that simple. 1. Choose your play. Loan or lease. What works for your cash flow? 2. Build your case. Focus on those 8 triggers we talked about. 3. Select your partner. Don't just go to your bank, shop around. And 4. Execute with confidence, knowing the system is built to make this work.
So I'll leave you with this question to think about. The next time you need to finance something big, are you just looking for a loan? Or are you using financing as a strategic tool to grow your business to achieve your goals? Because when you start thinking that way, everything changes. You're not just borrowing money, you're investing in your future.